To Javier's point, it's been very hard to get the exposure to a higher oil price outside of the spot price itself, outside of futures, because the equities have not been catching up. If you want to have that exposure to an upside risk in the commodity market, where are you getting it?
Yeah, look, I think it's been interesting. Really, since the middle of June, there was a big turn in some of those oil equities. So they've started to play catch up. But you're right, John, they lagged for most of the year. Where we see the next move is oil services. Oil services have really lagged. They've been under a lot of pressure to cut their prices, their revenues. And so we think they're going to play catch up. So kind of the $55 to $65 move in oil, we think goes to the oil services companies, the drillers, the sand companies, and they seem to be reacting. The other place we think you're going to make big money in energy is MLPs. MLPs have been beat down because of worries about the tax bill. They didn't materialize in terms of changes, so we think they're a great buy here as well.
Javier, what do you think the explanation is for that? The idea that equities haven't really kept up a pace with what's been happening in the commodity market?
Well, one of the big reasons is that it's a long-term view by some institutional investors that oil is not longer the place to be in the energy space, that it's better to be in renewables, it's better to be in solar, in wind, rather than to be in crude oil. I think that there is a growing theme among institutional investors, the big names of the industry, the BlackRock, the Legal & General, that see that oil is not a growth sector anymore, even despite the fact that oil demand remains quite strong. So I think that has been one of the big reasons why oil equities have not been performing as well as the oil market has been doing.
Kirk, are you constructive on the commodity market? We're on a 15-day run on the Bloomberg Commodity Index, and if you are, do you want to play that through equity, through the energy players? Do you want to play that through FX, whether it's the Norwegian kroner or whether it's the Russian ruble? Where do you want to do this?
Well, absolutely. I think if you look at demand for commodities and energy in the emerging markets, if they continue to do well, you look at an economy like India that has to import oil, I think the commodities are going to continue to do well. You also look at electric cars and you think about cobalt and a lot of the commodities that will support that market. You want to play that as well. So I think there are a number of ways to play it. The only other point I would make is I am worried about geopolitical risk, because I think some of the spike in oil is because Iran and Venezuela are going offline for a while. So I think that you have to be careful that you don't have a shock in that area.